Bitcoin raised the bar, breaking through 100,000 for the first time, then retreats slightly. Wealthion is here to give you insights that'll help you navigate your financial future. I'm your host, Andrew Brill. Welcome to Wealthion's weekly market recap. Let's see what our experts had to say this week. This week on Speak Up, Peter Schiff joined Anthony Scaramucci. Given the state of the economy, the incoming administration, and uncertainty, Peter contemplated what the Fed will do in 2025. He's also a Bitcoin detractor and explained what he sees as the risk concerns for Bitcoin.
Let's talk specifically. What do you think the Federal Reserve does in the year 2025?
Well, I've been arguing for quite some time now that the economic data did not tell the true story. And in fact, that's why I believe Trump was elected. I mean, if the economy was as great as Powell claims it is, as the media claimed it was, as Biden claimed it was, Harris would be the next president. All the exit polls showed that it was a pocketbook election, that people were voting for change because the economy and inflation were the number one issues. And the economy and inflation are only the number one issues when they're bad. If they're good, nobody cares about it, and they vote for other things. So I think we're going to continue to get weaker economic data, like all the data we got today was extremely weak, from the ADP numbers to the ISM numbers, factory orders. I mean, I think we're going to keep getting more downward revisions to a lot of the numbers. We've gotten multiple downward revisions now to the non-farm payroll numbers over the past year and a half. I think it's very possible that we've been in a recession for most of 2024. And I think that will continue into 2025. And so as the data gets stronger to support that, the Fed is going to try to continue with its rate cuts. But I am expecting a return to quantitative easing. Now, I was on a panel down in New Orleans like a couple of weeks ago. And on that panel, Danielle DiMartino Booth was there, and I mentioned that I thought we were going to have a return to QE. And what she told me is, no, they can't do that unless they go to zero first, that somehow they can't launch quantitative easing unless they have a zero bound. Now, I had never heard of that before, but it's my bet that if that's what the rule is, they're going to violate that. Because I don't think they're going to be able to get back down to zero, but I do think they're going to restart the QE engine, because I think that they've already lost control of the long end of the bond market. Because one of the forecasts that I made that I got right recently, I was saying that when the Fed cuts rates, that was going to be the bottom of the long-term rates and that they would go up. And that's exactly what they've done ever since the Fed cut rates. Long-term rates have gone the other way. And I think that's going to continue. And that's going to be very problematic for the Fed because it's going to be harmful to the economy, to the housing market. And when we're in a recession, or when the recession gets worse, I think the Fed is going to be pressured to try to lower long-term rates. And the only way it would be able to do that is by buying the long-term bonds. And the only way to get the money to do that is to print it. So I think we're going to have a resurgence of inflation. We're going to have a weaker economy, stagflation. That's the one thing that, of course, the Fed has no plan for. I thought it was, almost humorous. And even it got a laugh out of Powell. A reporter asked him at the last press conference, "What's your plan for stagflation?" And he laughed and said, "Our plan for stagflation is that we're not going to have it." And so they're just hoping that there is no stagflation. But that's unfortunately where we're going.
Here on Wealthion, give us an update on where you are. I saw you actually at one point express some regret, typical trader in you. You were like, hey, I regret not buying some, right? Because it went up. But I really want to talk about the fundamentals and the risks associated with cryptocurrency from your opinion. Give us that update from your mouth to our network listeners.
Yeah, I get a kick out of like some of the crypto people trying to make something out of the fact that I say, oh, I regret not buying Bitcoin, as if I've changed my opinion. I mean, obviously, when I first learned about it, and I don't remember exactly what the price was. I forget if it was above or below $1. I mean, I really can't say, but it was around $1 when I learned about it. And I had money. It wasn't like I was poor back then. I had money. So I could have put 10 grand, 100 grand. I could have put something into it and I'd be a multi-billionaire today, assuming I hadn't sold it. But, I don't know what I would have done had I bought it back then, how much I would still have. I mean, I have no idea. So it's hard to say. But clearly, I should have taken a chance on it and I didn't do it. But that doesn't mean that I believe in it. I mean, just like I have underestimated how big the bubble can grow with U.S. debt, right? How much money the world would lend us before we had a debt crisis. I overestimated, I guess, the intelligence of individuals, and now companies with respect to understanding Bitcoin. And, I had no idea that the bubble could get this big. I think what's really happened recently, you had two things. You had the introduction of the ETFs and Wall Street coming in and buying up Bitcoin. That pushed up the price. I mean, obviously, nobody is buying Bitcoin in an ETF because they want to use it for anything. No, they're not using it as a currency. They're just gambling on appreciation. And I think that kind of started to wear off. And then, of course, you have MicroStrategy, Michael Saylor, single-handedly. I think he's bought in the last month 11.5 billion more of Bitcoin, a lot of it with borrowed money, but the rest of the money he raises just by, selling shares of stock. So he's just been this crazed buyer that not only has pushed up the price, but has caused a lot of other people to buy it, to front run his buying, to try to, make money off of the buying. And now you have, Senator Loomis introduced this ridiculous bill to create a strategic Bitcoin reserve, which there's nothing strategic about Bitcoin, and we certainly don't need to have a reserve of it. But I think that the potential for this, and you had all these guys down at the Bitcoin conference in Nashville, RFK Jr. and Trump, paying homage to the Bitcoin crowd, really pandering to that community, promising them this Bitcoin reserve, which is really a payback for their donations and their support. But I think that the prospect of the U.S. government buying, 1 million Bitcoin, regardless of the price, just buying every single month and never selling. The Loomis bill says you can't sell that Bitcoin for 20 years. I mean, what kind of reserve is it if you can't use it? But with all this stuff happening, I mean, that's really what's pushed up the price of Bitcoin. But I still think it's a bubble. I still think it's not digital gold. I mean, Powell got that wrong today. He was asked about Bitcoin, and he said he doesn't see it as a competition to the dollar. He doesn't see it as a currency. He said it's just like gold, which it's nothing like gold. So he doesn't understand gold either. That's another thing Powell doesn't get. But I do think it's going to collapse. Yes, a lot of people made money on Bitcoin. A lot of my neighbors have made a ton of money on Bitcoin here in Puerto Rico. You probably know some of them, and they always like to tease me about the fact that I didn't get all that. No,
Dan Moorhead. So not to be self-promotional, but Dan, I wrote this book. Dan came to the book party last night here in New York.
Yeah, he's here.
I guess I would say something to you that I would ask you to consider and get you to respond to. And I guess, and there are people out there who say that there's more uses for gold than just jewelry and there's some industrial uses, and I accept all of that. But is there a database? A bank is a database. A bank is a spreadsheet. It's a regulated spreadsheet. You have your assets on that spreadsheet. I have my assets on a spreadsheet. Mm-hmm. I move assets to you. There's a spreadsheet. Is there a case to be made that this is an impregnable, fully distributed, fully decentralized spreadsheet, and that there's value in that network? And as tens of millions, if not now hundreds of millions of people are on that network, that there's value in that network. And so that would be the Robert Metcalf explanation of the network effect, where you say there's no value in that network. So Bitcoin's value is zero.
Look, they like to compare Bitcoin to the internet, right? And the beginning of the internet. Well, Bitcoin came around in 2009, 2010. So, it's, what is it? 15 years it's been around. And, I know in the first 14 or 15 years of the internet, I noticed a very big difference in my daily life. I went from never using the internet to constantly using the internet. In fact, today I can't even be without the internet. I mean, everybody, I'm on my smartphone all the time. The internet is probably the most important thing in my life, as far as something that I use, something that adds value to what I do. In contrast, Bitcoin has been around for those 15 years and it hasn't changed a thing. I mean, other than the fact that some people have gotten rich because they bought it a long time ago, and other than the fact that if I turn on CNBC, all I see is Bitcoin commercials and people talking about Bitcoin. As far as in the real world, it's done nothing. It's changed nothing. Blockchain has changed nothing. Crypto, nothing has changed because of Bitcoin. So, you have a cult, you have all these conferences and people go and talk about it. I was just over the weekend, I was in St. Bart for Thanksgiving. I come on the plane to come back, the little prop plane, and the pilot sees me, says, "Oh, when you going to buy Bitcoin?" The guy's mining Bitcoin in his spare time. He's flying this plane for a living. He lives here in Puerto Rico. But I mean, apart from people trying to make money off of Bitcoin, it hasn't done anything. So I don't see the value. Michael Saylor, I see his interview, goes, "It's the only asset in the history of the world that has limited supply." No, I mean, has he not noticed that there are hundreds, thousands of other cryptocurrencies? Many of them have supply caps exactly like Bitcoin. I mean, and there's an unlimited number of cryptos that somebody can create. You can create one, I can create one, and we can limit the supply to whatever we want. So the key is not limiting the supply. The key is the utility of the asset that you're limiting the supply of. Gold is the most useful metal in the world. So, there are more uses for gold than any other metal we have. It has properties that are very unique to gold and that are very special and that are very valuable to mankind because of the things that we can do with gold. But there's nothing unique or special about Bitcoin other than the fact, yes, there's a lot of people who believe in it now and who have built up all this computing power and this huge network around Bitcoin. But my belief is the main reason that all of this capital has been wasted and misdirected into Bitcoin is based on the belief that the price is always going to go up. And that's the whole basis of the MicroStrategy strategy of continuously buying higher and higher cost Bitcoin with more and more borrowed money, because it's never going to come down. Because if Bitcoin goes down, MicroStrategy is bankrupt. But, no one cares because Bitcoin can only go up. I mean, we finally invented an asset that has no downside risk and can only go up, right? I mean, where have I heard something crazy like that? So I don't see the real value there. I don't, I make payments all the time, very quickly, with my credit cards. I've used Zelle, I use PayPal, I use Venmo. We have all kinds of ways that I can send money instantly anywhere I want, very quickly, costs nothing. I don't see where I need Bitcoin to do any of that. Nobody uses Bitcoin for that. And so I don't see what value it actually brings. I mean, it's a sexy story that everybody tells to try to justify the price and getting people to buy it. But in fact they've already admitted that it's not good as a medium of exchange. Nobody even pretends that anymore.
Are you concerned about your financial future or think your investments could be doing better? I'm Andrew Brill, one of the hosts here on Wealthion, and I've been there. Not sure my money was in the right places. It's why I've gotten help from a financial advisor. Maybe it's time you think more about your financial future or get a second opinion about your investments. We've made that process easy. Simply go to wealthion.com/free to speak with one of Wealthion's registered investment advisors for a free, no obligation portfolio review. Again, that's wealthion.com/free. I'm now less anxious and confident I can achieve the financial goals I've set for me and my family. Ed Yardeni of Yardeni Research was a guest on Wealthion this week, spoke about Donald Trump's economic policies. Given global unrest, he talked about the future price of oil. Ed believes the Fed will stick to the quantitative easing cycle and cut rates one more time this December, and he pondered the question of history repeating itself from 1920.
So let's spend a little more time on politics. And as you mentioned, Trump and the Republicans, they won by a landslide. They took the House, they took Congress, they took the Senate.
Yep.
And so you mentioned that you're expecting some volatility this year, and I'm wondering why. And also because the Republicans took the White House and also the Congress and Senate, what does this mean for your expectations for the year?
Well, there's so many policy proposals that with many of them likely to get enacted pretty quickly. So there's, on the happy side, what the stock market liked once it was clear Trump won is the promise to cut corporate taxes from 21% to 15%. That's a big deal. And then for the consumer, he promised that there'd be no taxes on tips, that there'd be no taxes on overtime pay or on Social Security. That's a big deal for a lot of lower income consumers. So that's important. And overall, those two should be positive for the economy. Then on the other hand, he's got the policies of that would possibly increase the deficit, which would be the tax cuts. And he's also got policies that would increase tariffs, which could increase inflation. So, the initial reaction from the stock market was positive, and the initial reaction for the bond market was not so much. But it's a moving it's a moving story here. It's a dynamic story, and now we have a new Treasury Secretary that's been nominated, and this fellow seems to be relatively conservative in terms of how much he wants to see the president implement. But let's face it, we've seen Donald Trump before, and at the end of the day, it's going to be all about what he thinks, not so much by what his policymakers think. But the volatility in the market could depend on how these things pass. They all going to be implemented all in one shot. I mean, from the get-go, tariffs are easy to apparently implement with executive order. And so that'll be the first thing. And stock market may not be too happy with that initially. And then all of a sudden we get tax cuts and the market might like that. So it could be a pretty bumpy ride here. But at the end of the day, I think the U.S. economy is resilient. It's proven that over the past 3 years. James, as you know, we've had this most widely anticipated recession of all times. It never happened. It was the Godot recession, the no-show recession, and the economy demonstrated that it could deal with a major tightening of monetary policy without having a recession. That was quite an accomplishment. That's something we anticipated, but have to admit, even we're kind of surprised by how well the economy has performed. And maybe that'll continue to be the case through thick and thin. The economy does well. There's been so many roadblocks, so many hurdles over the past 3 years, and yet here we are at record highs in the stock market.
The price of oil's been hanging around $70 for a good part of the year, and this is in spite of what's happening in the Middle East and also Ukraine. And I almost get the sense that if we didn't have these hostilities going on, oil would be a lot lower, $60 a barrel, maybe $50 a barrel. I don't know. But what are your thoughts? Do you think it's at this level just because of a slowdown in the U.S. economy or the global economy?
Well, I think the most important explanation for the weakness in oil on the demand side is China's weak. China's property bubble burst. We know from what happened in Japan in the 80s and the United States in the 2000s that once the property bubble bursts, it takes several years for it to no longer have an adverse consequence on economic growth. And I would argue that the Chinese housing bubble is probably the biggest housing bubble of all times. And so that being the case, I think that's depressing the Chinese economy. The one-child policy of the Communist Party has come back to haunt them. They've got a geriatric demographic profile, which is clearly not stimulative to consumption. Consumers have a negative wealth effect from home prices being down and from the stock market being down. Now, of course, they are doing their best to try to stimulate things, but I think they would have to do something pretty radical, kind of like what we did here in the U.S. During the pandemic, and that's actually send people checks to have them spend it. Without the consumer actually increasing their spending, I don't know that the Chinese economy really is going to perk up. And the other thing is, with regards to energy, is they're driving a lot of electric vehicles. I mean, that's one country where I think the electric vehicle push really is turning out to be a big deal. And that being the case, that reduces the demand for oil. It doesn't reduce the demand for energy, but they're building more and more power plants, and they're building their electrical power grid to handle all that. Now, of course, they're doing some of that, maybe a lot of it, with coal-fired plants, so that kind of counters what the world is trying to do in terms of reducing the amount of carbon in the air. But that's what they're doing. India is doing very well, but I haven't been to India, but I'm told the traffic is horrible. So I got to believe they're burning up a lot of gasoline. But then again, they're not getting very far. So India just hasn't been the kind of growth market for energy the way China has been, and Europe is a mess. I mean, it's got a lot of problems, and their economy is kind of bumping along, struggling along. So that's the demand side. The U.S. is doing fine. We're driving. Gasoline consumption is relatively high. We're also buying electric vehicles. But on the supply side, there's just a lot of oil. And it's the Russian oil is getting out one way or the other, and probably being sold to China and India. And the United States, despite Biden saying that he's against fossil fuels, we're producing at 13 million barrels per day in the oil fields, which is basically a record high because of the productivity of the oil industry. So you put it all together, and it's hard to see much, if any, upside here. And even with the geopolitical crisis, as you mentioned, we haven't been able to get the price up at all, really. And so now there's talk that Hezbollah and Israel are going to have a ceasefire, and maybe that'll start to calm things down. But, we still have the issue to resolve between Israel and Iran, and that may still involve a military confrontation between the two of them.
So when we spoke a year ago, I want to talk about the Fed now, but when we spoke a year ago, there was individuals out there calling for 6 cuts in 2024. And we've had 2 cuts. We got 50 in September. We had another 25 in November. We have one more Fed meeting coming up before the year end. What do you think they do?
Well, I didn't buy into the multi cuts in the Fed funds rate at the beginning of this year. And you're right, the people were talking about 6 to 7 rate cuts this year. And then we got closer to the fall, and people were talking about 25 basis points at the September 18th meeting. And we kind of caved in and said, okay, they're going to, they're not listening to us. The economy doesn't need it. Inflation is moderating. The economy is strong. The Fed doesn't really need to cut rates. Rates are actually probably where they should be. But they just wouldn't listen to me, and instead went their own way. And not only did they cut, but they cut by 50 rather than 25 basis points. And my reaction was, watch the bond yield go the other way. And that's exactly what happened. The bond yield went up like 75 basis points after that meeting. And then they went down 75 basis points all told so far this year by cutting by another 25 in November. They believe that the Fed funds rate is restrictive. And I said, well, wait a second. They're supposed to be data dependent. And I'm looking at the same data as they are. And I'm saying the unemployment rate's just about 4%. Inflation is about 2%. I mean, aren't we there? I mean, it's like the kids, you take a long drive and the kids are in the back seat saying, are we there yet? Well, we're there. We're at nirvana. We're where we're supposed to be. And somehow they think that these rates are too high. But the economy has demonstrated that it could do just fine with this level of interest rates. So I'm not convinced that they really have to lower interest rates much more. I think they've sort of started to back off and say, well, we're still lowering rates, but maybe more gradually, which is fine. I mean, if they want to do it slowly and see how the economy is responding, they were going to do that anyways. But I think interest rates have normalized. 4 to 5% bond yield is kind of where we were before the great financial crisis, before all the abnormality was zero interest rates. It's not a Fed funds rate of 4.75%. It's not a bond yield of 4.25%.
Okay, so let's talk about the stock market now. And you mentioned this concept of irrational exuberance, and I think we see this. We see a lot of it going on right now. When you look at this year in the S&P, it's up 25% on the year, give or take. But you have a lot of individual stocks, like I'm going to say MicroStrategy. It's up 500% on the year. Palantir is up 250%. NVIDIA is up 200%. Like these moves are just astonishing. And then just recently, I'm sure you saw this individual, his name was Justin Sun, just paid $6 million for a piece of art, which was essentially a banana taped to the wall.
Yeah.
Duct tape to the wall.
Yeah.
But when you see things like that, these moves, and also this piece of art going for $6 million, does that not concern you a little bit that we might be in a period of irrational exuberance?
James, it concerns me a lot. It concerns me that I picked the wrong career. I should be an artist and just tape a banana to the wall and get $6 million for that. That's pretty sweet if you can do something like that. And I think you forgot to mention Bitcoin. Bitcoin's also been kind of that vertical ascent we've seen in some areas of the marketplace. So, the irrational exuberance, aspects of irrational exuberance are certainly there. Interestingly, though, of late, the market seems to be broadening out, the stock market to mid-caps, the small and mid-cap stocks. And there's no irrational exuberance there. That's quite the opposite. They've been really cheap for a long time, but irrational exuberance could lead them to be overvalued pretty quickly. We see some pretty remarkable moves in a very short period of time. So I am starting to see a little bit too much bullish sentiment, and so I may have to reconsider the subjective probabilities that I assign to kind of a civil bull market that carries us through the end of the decade without any major drama, and reconsider the potential for a 1990s kind of melt up because there are aspects of it. But some of these areas where we were seeing the market, the big moves to the upside, they're kind of justified by earnings. I mean, NVIDIA certainly looks like it's still justified by earnings, and its growth rate is what is it now? Only doubled over the past year, so that's a little bit disconcerting, I suppose. But I mean, the bottom line is there's irrational exuberance is here in some areas for sure.
And you mentioned earlier that, or a few years ago, you've actually coined this decade as the Roaring '20s, just like the 1920s.
Yeah.
and we all know how the 1920s ended, right? But makes me think of that book. I'm sure you read it, by Charles Mackay, The Madness of Crowds.
Yeah. Well, I think you're making a really good point, and that is, history is relevant, and it doesn't repeat itself, but it rhymes. And in this case, I've been thinking that what causes recessions and bear markets is tight monetary policy. So we had that, and we actually, as we noted earlier in our conversation, I've been kind of pushing against that. I would say, the surprise this time is going to be that monetary policy doesn't cause a recession because the credit system is more resilient, the economy is more resilient, consumers more resilient. I made a lot of arguments which are more specific of why I thought the economy would handle it. So, all right, so let's move on. What else could cause a recession? Well, oil prices soaring, shortage of oil. We're all waiting in gasoline lines, not able to enjoy our lives, go on with our lives. And so here we had the geopolitical crises, and the price of oil is down, and there's plenty of oil around. Okay, so that didn't cause a recession. So what's left? Well, as you said, the 1920s ended very badly, and I think we all know, there's no debate, that one of the main reasons that it did was because of the Smoot-Hawley tariff, which was passed in May of 1930, and that shut off world trade. So I guess we can then say, if we can't find any, recent reason for why this economy should have been in a recession. Well, we got a new one here, which is an old one, and that's tariffs. And if we get tariff wars, then we very well could see a global recession. So it's a very good point, and it does make the 1920s relevant as history, because while it was a lot of fun for a while, it's when the government implemented this horrendous tariff and policy that things started to really fall apart. It wasn't really the speculative excesses in the market. It was a recession, a depression caused by the Smoot-Hawley tariff. So I would put that certainly in the bucket of what could go wrong. Geopolitics is still in there, but maybe it's less of an issue. And the debt crisis is still in there, but again, maybe it's less of an immediate issue. And then all of a sudden, because of Trump winning, we got tariffs in there, and it's more of an issue.
The charismatic Lobo Tiggre of the Independent Speculator stopped by Wealthion and spoke about rising unemployment and false data reports. Given the recent news about BRICS, he talked about the dollar versus BRICS, and given the power needs of AI, Lobo is very bullish on uranium.
And I want to have a deeper discussion on gold, but before we do that, I want to continue on with this theme about the economy. And as you mentioned, the non-farms are coming out this Friday, and I guess that will, depending on those numbers, that will validate or invalidate your thesis. But your concern, if I understand you correctly, is this growing trend we're seeing in unemployment. It bottomed in Q1 of 2023 at 3.5%. The last number we saw was 4.2%, so the trend is definitely up. Do you think it continues as we enter 2025?
Well, I think it was 4.1 and it was flat over the month before, but that was only because of labor force participation rate dropping. So if, other things having been equal, we would have actually seen an increase in unemployment. And the establishment survey versus the household survey. So if you ask establishments, hey, are you full of workers? And they say, yeah. That captures the illegal workers, which I'm not hostile to illegals, as so many are. I'm not a big fan of the big deportation plan. And in my view, the problem is not people that want to come here to work. My view, the problem is giving people, socialist benefits for coming here and not working. But anyway, I don't want to get into the politics of that. My point is that the employment situation is actually worse than the headline numbers make it appear. And I think even on the mainstream, you'll see some admission of this, the number of new jobs that are government jobs, right? The number of new jobs that are part-time jobs. I think the more, the people that aren't trying to make the current administration look good, the more objective observers out there, not just tinfoil hat Lobo, but mainstream types, everybody can see weakening in the labor market. And I think that's one reason why, despite sticky inflation, which we also got, we just got PCE, supposedly the Fed's preferred measure of inflation, going up. And yet the market odds of a rate cut coming up this month also went up. Why would that be if inflation is going the wrong way? Well, it's because I'm right about the weakness in the labor market. And I think everybody can see it, everybody objective. And maybe even the non-objective ones see it, but just don't admit it. So I don't want to say that everything hinges on this one number, but this one number will be very important for validating or invalidating my thesis. Fortunately, my thesis wasn't, sell everything or if I'm wrong about the undeniable recession, I'm not actually going to lose money because, my therefore bet was, gold higher, gold and silver higher. And that has happened this year. So I'm actually okay. Where this could hurt me is that because I'm still in this hard landing camp, I'm not ready to buy into copper or oil or other industrial minerals or energy plays, except uranium, of course. And I may miss the bottom. I may, I'm not trying to time the market. I'm just reluctant to buy when I see a sale price ahead. And that may cause me to end up having to pay more in the future. But you know what? That's better than losing money. And if I have to pay a little bit more, but I'm betting on a long-term bullish trend, then I'm very optimistic. And you haven't asked me about 25 yet. But I'm not worried about missing the bottom. I'd rather do that than bet big now and then have a fire sale price next month, right? I'd be kicking myself. Either way, I think I'd come out ahead.
This year, we've heard a lot of commentary about the BRICS nations and how they want to come up with another currency to overtake the US dollar. And Trump really recently made a comment regarding the BRICS nations, and he is threatening 100% tariffs on any country who tries to undermine the US dollar. What are your thoughts on this?
It's political grandstanding. I mean, how do you define undermine the US dollar? How do you show that somebody has undermined the US dollar and slapped that 100% tariff on them? Very vague. Arbitrary. I also understand, though, that it wasn't just, I mean, there are different headlines here. But the more specific, actionable thing is if you implement a BRICS currency as an alternative to dollar, then I'll put this 100% tariff on you. But that's just an idea. And I know that gold bugs, my dear fellow gold bugs have been talking about this BRICS gold-backed currency for a long time. But every time it comes up or there's an opportunity for it to come up at a BRICS meeting, it doesn't. And, the last time there was this big fuss about in South Africa last year, they were going to introduce the gold-backed BRICS. And Russia, ever one to stir the pot, was saying, oh, yeah, this is coming. And the South African host said it wasn't even on the agenda. Never mind a gold-backed BRICS currency. There was no BRICS currency even on the agenda. Lo and behold, nothing happened. So at this point, all the evidence suggests that at most, a BRICS currency, whatever it's backed by or not, is just an idea. And if it does happen, it would take years to implement. This isn't the sort of thing you just flip a switch and it works. You're talking multiple governments that don't trust each other, don't even speak the same language, right? Are not all on the same economic page, very different economies. To get them to come together and put this together, it is, even if it's happening now in secret, something that would take years to deploy, perhaps or probably longer than Trump has to be in office. So it's just bluster and grandstanding as far as I'm concerned. That said, he's telling other countries what to do and what not to do and making threats. That could produce backlash. I'm sure the diehard, MAGA hardcore Trump supporters loved it. Yeah, those anti-dollar people, stick it to them. But it's a dangerous thing in a multipolar world to be, throwing threats like that around. So we'll see what happens. Ultimately, though, if this were to actually happen, I think it would totally backfire. It would be all the more reason for other countries to say, you know what, the U.S. is trying to control us. We need something besides, we need to get out of under the U.S.'s thumb. And the main way the U.S. keeps other countries under its thumb is control of the dollar. We just saw that with kicking Russia out of the weaponization of the dollar, kicking Russia out of the SWIFT system and so on. I actually see this as very good for gold once again, not to harp on that one thing, but these are your questions. And, whatever happens with this, I see it as being pro-gold. And I just hope that it doesn't blow up in the U.S.'s face.
So let's move on now and discuss nuclear energy and uranium. You've been very bullish on uranium in the past, and it's down on the year, which I find quite surprising because I don't think there's another sector that has a more bullish or more positive backdrop than nuclear energy and, by extension, uranium. But what are your thoughts on uranium here? It's down, what is it, down 10 or 15% on the year?
Well, first, I don't want to dislocate my shoulder patting myself on the back, but it's not surprising to me at all. This last time we talked, it was in August, but if we talked before that, around this time in 2023, I was saying, my highest conviction trade for 23 was uranium, and that doubled in that year, so that worked out well. But my highest conviction trade for 2024, despite all that you say being true about the fundamentals for uranium, was not uranium, it was gold. That's worked out well for me this year too. But the reason for that was the answer to your question. Uranium shot way up, way over the incentive price needed for high prices to start to cure high prices. And it's normal when a market goes vertical like that. I mean, gold's up 25% this year, but uranium doubled last year, more than, and up over $100 an ounce when the incentive price was maybe 70, $80. And the long-term contract price was still it was like maybe 50 or 60 at the time. It took time for the long-term contract price to catch up. It was, I think, perfectly reasonable to expect some kind of pullback. And I got a lot of hate for saying that, but I was right. I'm sure glad I shifted my focus from uranium to gold in 24. And it's playing out now. I mean, I remember in 22, people were wailing and pulling out their hair because uranium hadn't done anything all year. I kind of feel the same way now, that people are maybe not quite so anguished because it, plus or minus $80 a pound, it's hard to be too despairing about uranium. But it hasn't done anything all year. Well, you know what? Mr. Market doesn't care what you want or it will move when it moves. To my mind, the correction was completely to be expected. It's very telling to me that uranium corrected basically down to where the long-term contract price had risen to, and that has provided a floor under spot. That's perfectly normal. Spot often runs away ahead, but then they converge over time. And I think that's encouraging. I don't actually see a lot of downside from here. High prices are incenting mothballed mines to be brought online, new low-cost projects to be brought online. So all that's working. And it's natural for the market to be concerned. Oh, well, high prices cure high prices. Let's see what happens. But on the ground, the reality is that these restarts and these mine builds, they're almost all of them are behind schedule, or they're slower, or they're not as much. Even Kazatomprom, which again, I'm not recommending one company or anything. This is important because it is both the world's largest and lowest cost uranium producer. That makes it the supplier of marginal pounds to the market. And it has just petitioned to its own government to cut its permits so that it doesn't keep missing its permitted usage. Like, it keeps failing to deliver as much uranium as it's supposed to. I think that's really telling for the largest and lowest cost producer to cut its guidance in that way. So I'm extremely bullish, but I understand why the market says, oh, well, we have new production coming online. There could be a surplus. I think they're wrong. I think it's taking longer. And even if all those mines do come online, our own in-house math, we have another free report on the uranium market if anyone's interested, says that this new supply won't be enough. So I'm very bullish. That said, is uranium going to double in 2025? That seems unlikely. We're already above the incentive price, or the incentive price at least. So I think it goes higher. I think it keeps going higher. I think long-term contract prices will continue going higher, and it'll drag spot higher in time. But I'm not looking for a hockey stick upside here. So I like uranium. I'm actively seeking to add more uranium in my portfolio, but I see more upside elsewhere in 2025 specifically.
Wall Street veteran Jordi Visser joined Wealthion this week. He got into deglobalization versus decentralization and commodity prices. He wondered, like many of us, when will crypto and AI become mainstream, saying it'll be full-scale adopted in the next 5 years, so get on board or be left behind. He talked about different generations and how they view the volatility of Bitcoin. So you think that gas at the pump right now is relatively low considering where it had been. You think that even gasoline, oil, that sort of thing will start to tick up? I mean, the situation around the world isn't so great. So geopolitically, there could be some uptick there as well.
Yeah, there's a couple things here. And I think this finally gets us into the election part. I think with Trump winning, people are going to have to start to reassess how countries view their own domestic politics, because I think that's one of the features of this. So if you think about deglobalization just as a theme, and I've always been focused on deglobalization. We still have that happening in many ways, but with Donald Trump taking over, I think whether you call it deglobalization, it's starting to migrate into decentralization, but also deregulation. These are a bunch of things which, for me, are going to force most economies around the world to think domestically and figure out ways to not be impacted by, say, tariffs, or just the fact that the U.S. is going to make things
more uncertain. You're not going to know what's going to happen on a week-to-week, month-to-month basis. And China just had a PMI number which moved higher. I'm definitely in the belief that China has already taken the reins and has put a floor into their economy for this year. And so that leads me to believe that the surprises there, particularly from a consumption basis, will be on the upside. And I think people have underestimated two things on energy. One is the whole EV car thing seems to have got people complacent that there's nothing that can really make gas at the pump go higher. We're down to $3.04 as of today. It's a big fall, and that's one of the reasons why it's kind of surprising that inflation on the core side has actually stabilized up here, because goods are definitely on the lower side. And so if China's now got their PMI seeing two back-to-back months on the Caixin of 1 point or more, the U.S. PMI numbers came out this morning. They're up above 48, and almost all the outlooks for the regionals are suggesting more optimism with Trump coming in from a regulations basis. So people are starting to get a little more optimistic there. And then I think there's also going to be a front-loading of orders on the fear of tariffs taking over, which will probably lead to a little bit more of a bounce. So I think you're going to get some upward prices on energy in the early, at least early in the year when Trump takes over. But then I think the other theme, which I'm sure we'll get into later, is I'm a big believer that the AI power needs are going to become relevant or become really, really recognized by the world as we get into the second half of next year.
So let's get into cryptocurrency. And I do read your Substack, and I am in the age group that you said that crypto is a speculative fantasy. You grouped AI in there a little bit too, but it seems that, and I'm curious to your take, calling it cryptocurrency, is that what's holding a lot of us back? I mean, we all keep a little cash in our pocket and we look at that as currency, but this is a digital world, the way you pointed out with the iPhone, and it's going to take just some education and getting used to it for it to become mainstream, isn't it?
For people, and I think the age that I chose in there as the defining line was 44.
Right.
And I'm above that line. The reason I chose that line is because that's where a bunch of all the demographics intersect for me. The percentage of people by demographic that use AI, it's dramatically higher for people under 44 and dramatically lower for people above the age of 44. Same thing goes for crypto on an ownership basis and a use basis. But then when you go to global net worth, the people above the age of 44 own over 90% of the global wealth. So it's a weird, we're in a very, very fast changing world. So when the Bitcoin white paper came out in 2008, a month after Lehman Brothers, if you go back and spend time on what it was and you break it down into two components, one just being the frustration towards governments and banks, and the fairness. This had been attempted many times before. Many thoughts had come through, some kind of financial competitive currency to represent it had been there. But I think cryptocurrency, to your point, is just a bad marketing thing for Bitcoin. And I think that's what confuses people. I don't view Bitcoin in any way, shape, or form as a currency. In fact, the technology behind it for payments and transactions is it's not great. And so that's why you've had things like Ethereum and Solana, which are much more geared towards speed, much more geared towards being able to handle the higher volumes. That's a better technology, these particular ones, and I think that's why they've gathered steam. So I have focused on Bitcoin as the store of value bridge between the physical world, where we've all basically been until the digital economy, which really, again, started accelerating in 2007 with the iPhone release. So I don't think people have put this all together, but within a span of July of 07 is when the iPhone was released. October of 2008 is when the Bitcoin white paper came out. And that to me was the white paper for explaining to people how, as technology accelerated, you were going to need the innovation of the blockchain to basically take decentralize the world and erase the middlemen, which means less government, less profits for the banks. And that's really what it represents. And that's what you're seeing. And I think that's the trend that's happening. So I'm writing more about it because, A, it's the most interesting macro story I've seen. I do believe in accelerating innovation. And I use AI 3 to 5 hours a day. I have more apps and I do more things on it today than I did yesterday. And it just continues that way. And I have the luxury of being now a consultant and helping people kind of bridge their own mindset, because that's the part that's the hardest, Andrew, is I just think people above the age of 44, it's very hard to forget what you've already learned and what you went to school for. It's very intimidating to think about learning AI and to think about investing in Bitcoin. I'm just shocked at how many people I have to explain how important it is not to invest all your money there, but at least to diversify by some amount.
How do you explain the volatility and the lack of perceived value? Obviously there's value. Bitcoin's 95, 96, 97,000, but there's a perceived lack of value. And that's why people are hesitant to accept it, I guess, is what the best word we can use.
Yeah. Let's see. I remember when I took a trip to China. And on that trip, I ate scorpions, and I was forced to eat turtle at a luncheon. Now, these are normal foods out there that you can buy anywhere. In the United States, not so much. You're not going to find them in places. It's not the same. And the reason I bring that up is Noah Yuval Harari and Sapiens really taught me a lesson to understand everything is a story. So when you say value is something that is perceived by people. If something goes higher, it has value. That's why I brought up baseball. Baseball cards, if you have the right baseball cards, they've gone up in value. So it's been a good store of value if you put money into it. Mm-hmm. If you buy a Picasso, if you buy anything, it's been proven to be good value. So value is just really representative of the story behind it that other people are jumping on board with. So to measure Bitcoin for value, when people talk to me about how you come up value, I go, well, when the internet was growing, the number one thing we used to measure whether it was going to be successful is how many people were using it, how quick the user adoption was. Well, that's what's going on with Bitcoin. I really appreciated the 2020, 2021, 2022 period. So after my son's peak in his net worth, which happened in like February of 21, Bitcoin peaked and then it went from 70,000-ish down to 16,000-ish.
Right.
That was peak to trough. That year in 22, it was down about 55%. So when I get asked the question about how do you deal with the volatility, I always say, well, let's see, it was down 55, 60% in 22. How much was Amazon down? And most people don't know, but Amazon, which is something that has a higher market cap, it was also down 50%. The NASDAQ itself was down over 40 or down about 40. So what you're dealing with when people talk about these things is they haven't adjusted to the story. But the problem is, if I talk to my son, he has. If I talk to people in Argentina, they have. If I talk to people in Brazil, they have. And that's why I said at the beginning, I just happen to be in an age bracket where I'm talking mainly to people in their 40s, 50s, 60s, and 70s. They haven't embraced it, but people below that age already have. So it's the people with the money that haven't embraced it. But the one thing I know about all of those people, they are greedy. They go to tennis clubs and golf clubs and all kinds of places. And the first thing they hear is, hey, do you own any Bitcoin? They will all own Bitcoin because that's the way all this stuff ends up going. It always has.
So how does AI fit into all this? And you wrote that AI is moving faster, changing. You made the point earlier that you use it every day for several hours and it's changing daily. How does AI fit into all this?
So for me, the connection of AI to Bitcoin in particular has to do with the digital economy. So Bitcoin is nothing more than a digital asset. That's it. So we've got the assets of the physical / fiat world. And when I say fiat, that's paper money world. So the things that most people have grown up on, like I own the S&P 500. Okay. Bitcoin is a digital asset. There's a finite amount of them. So there's a scarcity issue. There's no scarcity issue on Apple stock. They can issue as much as you want to issue. In fact, MicroStrategy, which has gotten a lot of attention, people are still trying to figure out how Michael Saylor is doing this. This has got to be a bubble. Everything makes no sense. And yet he's just selling fiat assets to go buy digital assets. That's basically what he's doing. He's issuing stock that people are buying or convertibles that people are buying. And then he's taking that money and he's going and buying the digital asset. And so this world is connected, the digital economy and the physical economy. We've all seen the rise of innovation. As soon as we started having an iPhone in our hand and started doing the things we went, it replaced physical assets. This was our doorway into the digital world. So before the iPhone, and it's amazing how only after 16 years, people forget. You watch TV shows from like 2002, 2003, and they have these flip phones and they have phones and you're like, okay, there were still cameras back then. If you look at how many cameras were produced globally in 2002, there were millions of them. Now there's none. I mean, there's literally, if you look at a chart, it looks like zero. So the digital asset side to me is going to be accelerated. We've been moving to the digital economy since the iPhone. The iPhone started the same time as Bitcoin. They're kind of brothers, if you want to use that. They came out at the exact same time. We've watched our kids sit there and play Fortnite. We've watched how quickly Fortnite became something big. The digital economy is just going to continue to grow and continue to be a bigger portion of the economy. While things like Ford versus Tesla make no sense, when people doubted that Tesla could have a market cap, a car company at $1 trillion, Ford, GM, Toyota, all of them combined don't even get close there. And that's been the case for a while. So AI is an accelerant on the iPhone. It's the next phase. And so far, all we've done in the last 2 years since ChatGPT is build out the infrastructure, and NVIDIA has benefited. I have believed, and I've written about this, and I'm writing another paper this week on it, is on AI agents, because I talk to people about AI agents and they don't have an easy time with that either. To me, AI agents are the accelerant for getting into the digital economy, and that is going to accelerate the amount of money that is moving into this other economy, the digital economy, through payments. And the reason that the payments are so important is, again, I think because technology is done so well and because their market cap is so big, people actually think that most of the profits in the world are in the technology sector. Financials are still enormous. Every single person who's watching this at some point, I'm sure in the last 10 years, bought a house. And you just think about how many people come with their hands to take money from you related to just buying or selling the house. The taxes from the government, the funding from the bank, the mortgage payments that go on, the insurance, all kinds of stuff that has to happen. Those dollars are part of the economy. That will be replaced more and more by AI agents. The same thing will happen in the healthcare sector. Same thing will happen in call centers. All that stuff is about to accelerate now. And that's why the next 5 years is about AI adoption rather than AI infrastructure.
So when we talk infrastructure, we're talking about the chips, the cooling racks, but you're talking more about the software that's going to actually let this AI work and stuff like that, right?
Exactly. This is the part. And again, in a span of, I'll just give you my brief journey. So my hedge fund closed in May. So we're now about 6 months of not going into an office every day. So the work that I do now is content, and it's helping people and consulting people for how do they think about investing in it, for portfolio diversification? How do they make the transition, speaking in front of groups like this, but more in public to help their clients and stuff? So that's really where my focus is going to be. And to really set up the business and go through, I decided, since I didn't have the time while I was going to a job where I found out how much time you waste going into work, the commuting time, the whole thing. And I did more of my work at home on the computer that I'm sitting here with. So I took 5 coding classes. I had always hired data scientists and coders to do the work for me. And I just wanted to learn the basics of coding. So I took 5 Python courses. These were online Coursera courses. I finished them within a span of about 6 weeks. And then I started to work on some tools where I was building my own things that I used to have data scientists do. Now, at the same time, I was using AI regularly. And my coding was bad, but the great thing was I would go back and forth between ChatGPT to write the code and then go back into the terminal and run my Python script and go through it. And I could do things. It was still kind of clunky, and I don't think the coding was particularly good back in July. But what's happened since then is it's gotten phenomenally better.
Thank you for watching this week's recap. If you need help planning your financial future, head over to wealthion.com/free for a free, no obligation financial review. And please follow us on social media. All the links are below in the description. If you haven't done so already, please make sure to like and subscribe to our channel. Don't forget to turn on notifications so you never miss a video. Thanks again for watching. If you like this content and are looking for more ways to keep growing your investments, watch this video next. Until next time, stay informed, be empowered, and may your investments flourish.